वेलकम टू वी लर्न में आपका स्वागत है. We are covering session 4 of balance sheet financing under the session banking operations. Topics covered are difference between on and off balance sheet, factors affecting growth of off balance sheet financing, importance of off-balance sheet financing in India, scope of off-balance sheet financing in India, guarantee, types of guarantee, precaution, safeguard, issuance of guarantee, letter of credit, precaution used in letter of credit, at the time of opening of letter of credit, at the time of receipt of letter of credit, on receipt of document under letter of credit. Now when we talk about difference between on and off balance sheet, traditionally what used to happen, banking activity basically comprises where bank borrows within some tight lending standards. Now what happens, so these used to keep the loans on their balance sheet and they still retain the credit risk. When we say credit risk, is that risk jahan pe there are chances, there are possibilities that the borrowers they may default or they are unable to repay the interest and the principals which are specified in the contract. Now in contrast to loans, there are securitization which enables bank to remove the loans from balance sheet, and that helps in transferring credit risk which is associated with those loans. Now when we say on balance sheet it includes all those kinds of items which are properly recorded in the bank's balance sheet. Whereas off balance sheet items, this is a form of borrowing in which the obligation is basically not recorded on the borrower's financial statement. Now there are certain techniques which are employed, such as development arrangement or leasing techniques. There are techniques such as resource sale of receivables. There are certain factors which also affect the growth of off-balance sheet financing. The first factor is increased volatility which give rise to a lot of demands for risk management by companies. Second factor is there is a lot of bank scope which is now tailoring a lot of financial instrument as well. Now third factor is bank's interest in saving capital and thus it avoids any kind of reserve requirements. Fourth is there is a lot of reduction in the competitiveness in various traditional activities. So there is a growth of off-balance sheet financing. The last is there is a lot of government assistance which is coming up, which is in the form of US government sponsorships when we talk about. And these sponsorships, they are basically of the securitized mortgage markets. Now there are certain importance of off-balance sheet financing when we talk about. Now the first very importance of off-balance sheet financing in India when we say is that it is very attractive from a risk management point of view. So when assets and liabilities they are moved from one balance sheet to another, the risk associated with these assets and liabilities they go with them. Second is off-balance sheet financing. It affords considerable financing and flexibility in their financing. So an SPV when we talk about, it does not utilize the sponsoring firm's credit line or other financing channels. It is therefore presented to financer as a standalone entity with its own line of credit. The third is it is often employed as a means of asset liability management. Now when we talk about this, if assets and liabilities, they are never placed on the balance sheet, they do not have to be matched. So they need to be matched on the SPV's balance sheet. The fourth is SPVs can be used in the cases of tax avoidance when we say. So banks, they use off-balance sheet financings to achieve various reductions in their regulatory capital requirements. The last is they can also be used to misrepresent a firm's financial condition. So prior to its bankruptcy, when we take the example of Enron, it created number of SPVs and used them to hide billions of dollars in their debts. Now there are scope of off-balance sheet financing in India also. When there are foreign commercial banks, when they were opening in India, balancing activities, they generated a very significant proportion of their incomes even during the pre-reform period as well. So however, for the Indian commercial banks, these activities were relatively unimportant because the banks, they usually were dependent on the funds which were based on activities for the generation of income. Now the scenario has changed considerably after the reform period. Why it has changed? First, because the deregulation of banking sector entry, and there are certain relaxation of branch licensing policies. They have resulted in a very substantial decline in the banking sector spread. And when we say banking sector spread, it is in terms of the total assets that we are talking about. So which is compelling the commercial bank to look for some other source of income. The second is there has been a lot of introduction of assets classification or the income regulations or capital adequacy norms, which are making the lending a very relatively risky proposition. The third is financial sector policies. During the reform period, they provided for a greater room for commercial banks, and this would help in engaging in off-balance sheet activities as compared to the pre-reform periods. When we say guarantee basically is a type of a contract, and a contract which promises to perform a promise only, or it's a kind of a contract to discharge the liability of a third person in case of his default. Now, in any ordinary course of business, when we talk about the bank often issues guarantee on behalf of its customer in favor of the third party. It is to be noted that when bank issues such a guarantee, it automatically assumes a responsibility to pay the beneficiary in case of the default which is made by the customer. Therefore, it becomes very important to understand the nature and the type of guarantees which are issued by the bank. So generally, when we talk about guarantees are issued first where government departments, they are for fulfillment of contracts, for supply of goods, for rendering services. Second type is where railways and airlines for payment of freight. Third is shipping companies for delivery of goods without production of bills of lading. Fourth is collector of excise or customs for payment of excise or custom duty. And lastly, which gives the beneficiary the right of transfer or assignment. When we talk about the types of guarantee, guarantee can be broadly classified under two heads. First is the performance and another is the financial guarantee. Now the criteria for classification of these two guarantees, they are as follows. When we talk about performance guarantee, they are those type of guarantees which secure the performance of contract, and they are not involving any loan transaction or financial obligations. Now they could be performance with regard to the construction of building, or installation of a plant or machinery within a given period of time and with some agreed specification, or performance of plant and machinery up to an agreed level of capacities. There could be guarantees given to secure advance payments. So it could be in place of security deposits or money deposits or tender deposits. There could be performances which are relating to the supply of material as per agreed specification in terms of the quantity, and that too within a stipulated time schedule. When we talk about financial guarantee, so these are the type of guarantees which are given to secure the loan transactions or certain financial obligations, whereby the bank, which is the guarantor, it undertakes to make the payment to the beneficiary within the limits of the stated sum of money in the event of default by the debtor. Now what happens, there are certain conditions of a contract between the principal, debtor and the beneficiary. The first is the guarantee for payment of determined liability towards tax, excise duties or custom duties, even octroi also. There are guarantees which are issued towards disputed liabilities. So in addition to applying these two above criteria for classifying the guarantees, the content of the guarantee to be issued, they are required to be gone through carefully, and therefore the contract entered into between the principal, debtor and the beneficiaries to decide as to whether a particular guarantee is of a performance nature or of a financial nature. When we talk about precautions or safeguards while issuing of guarantee, so there are certain precautions which needs to be taken care of. The first is the banks, they should open the letter of credit and the purchase, discount or negotiation bills under LCs, and which are only in respect of genuine or commercial and trade transaction of the borrower's constituent. Now, but banks, they should not extend the funds based or non-funds based facilities like opening of LCs or providing guarantees and acceptance to non-constituent borrowers and or non-constituent members of a consortium. Second is, while issuing any kind of financial guarantee, it should be ensured that the customer would be in a position to reimburse the bank in case the guarantee is invoked. The third is, in the case of performance guarantee, there should be very due cautions exercised to ensure that the customer, they have necessary experience, B, they should have the necessary capacity, and C, they should have all the means to perform the obligations under the contract, and they are not likely to commit any kind of default. Prior to issuance of any guarantee in terms of the contract between the parties, it must be scrutinized very well. This is very important because the guarantee bond is subordinate to the contract, which is of a paramount importance. Then comes when the guarantee, it is issued in terms of some type of contract. The contract will cover the terms. So the guarantee bond is basically subordinate, is junior to the contract. So the contract is of paramount importance. Lastly, the guarantee, it should be for a specific amount and for a genuine trade or business transaction. It should therefore be for a very definite objective. It should be enforceable on the happening of the definite event. When we talk about letter of credit, so a letter of credit is basically एक undertaking होती है बैंक से to make a payment to a named beneficiary within a time which is specified, and as against the presentation of documents which must comply strictly with the terms of the letter of credit. Now a letter of credit is basically opened by an importer, that is an applicant, to ensure that the documentations which are requested, they reflect and prove that the seller has performed under the requirements of the underlying sales contract, and by the exporter by making them conditions of the letter of credit. Now for an exporter, when we discuss a letter of credit, apart from cash in advance, it is the most secure method of payment in international trade, and as long as the terms of credits they are met. Now this diagram, it shows the parties who are involved in the letter of credit transaction. Now its main advantage is basically providing security to both the exporter and the importer. So the security offered, it comes at a price, and it therefore must be weighed against the additional cost resulting from bank's charges. The exporter, he must understand the conditional nature of the letter of credit, and therefore the fact that the payment will not be made unless the terms of the credit are met precisely. Now the exporter, he needs to be very certain that there are certain necessary conditions to use a letter of credit. Now these typical considerations, they include it is a legal requirement in the importing country. Second, what is the value of the order? Will the bank charge be out of the proportion to the value? Then what is the country risk of the importing country? What is the standing of the issuing bank? And it is very important to remember that all the parties in the letter of credit transaction, they deal with the documents and not with the goods. There are certain precautions which needs to be taken care while issuing letter of credit, and these precautions, they are at the time of opening of a letter of credit. There are precautions which needs to be taken at the time of receipt of letter of credit, and there are precautions which are to be taken on receipt of documents under letter of credit. Now there are precautions at the time of opening of letter of credit when we talk about. So letter of credit को खुलने से पहले there should be that should be in favor of the seller. The bank, they should assess the credit worthiness of the seller. Now the second precaution is, it is very necessary and essential to know what kind of goods, and the specification submission of the quality reports or the inspection report, it becomes very essential, and it needs to be done with the help of an independent agency so that it ensures a proper receipt of goods and proper quality of goods is ensured. Third, once the letter of credit it has been issued by the bank, a copy of it must be obtained immediately. So the letter of credit, it must be checked to ensure that it has been issued in a proper way. When we say at the time of receipt of letter of credit के receipt पर from an opening bank, the beneficiary, it must ensure कि letter of credit is not superimposed by any clause. The second is letter of credit, ये बहुत clearly state करना चाहिए that it is irrevocable and it has been issued by a bank of a repute. Thirdly, letter of credit must be scrutinized so that the terms which are indicated, they are in conformity with the underlying sales contract. So it does not contain any ambiguous clause also, and the documents required therein should be completed. The fourth is there must be necessary arrangement for the shipment or dispatch of goods after acceptance of letter of credit. The shipment and dispatch, they must be made as per the terms of LC and well within the period which is prescribed under letter of credit. However, there are certain discrepancies which cannot be rectified, and there are two options which are available. First option which is available is to get a confirmation or authority of the opening bank to negotiate any kind of discrepant document, or the second option available is to get the document negotiated under the reserve after giving suitable indemnity bond to the negotiating bank. Then comes on receipt of the document under letter of credit. Now the negotiating bank, they will transmit the document to the opening bank after the negotiation and after obtaining reimbursement in terms of letter of credit. So the opening bank is supposed to give a very reasonable time to study the documents and then decide whether the documents, they are in accordance with the terms of the credit or not, or whether they are acceptable or not. Now the reasonable time, when we talk about, it has been specified under the section under the article 13B of UCPDC, and it must not be to exceed 7 banking days following the day of receipt of the document. Now the receipt of the document, it will be advised by the opening bank to the applicant how the applicant, it must be required to independently scrutinize the documents under letter of credit, and they are required to ensure that the documents, they can be accepted. In case if there is any discrepancy which is noted in the document, they are not acceptable, the document must be rejected and an immediate notice is required to be given to the opening bank. The second is, the document, if it is acceptable, it must be taken upon due date, for which necessary financial arrangement shall be made in advance. 2 exercises. SPVs can be used in tax avoidance, and the special charges are levied on duplicate guarantee. Thank you and have a nice day. Keep learning and relearning.